cool. Okay. All right. Let's see what's cooking. Cool. Let's see what's good. All right, so the interest rates come out, and it's the same as what it was. So that means that the FOMC press conference is going to be more important than anything. Whether they give a hawkish or a dovish outlook is going to determine whether we see prices push up or prices come down. Okay. Okay, cool. Look, now that the rate decision is out of the way, and it was exactly what the market expected, which was no change. Gold initially pushed higher because there wasn't a surprise hike, and traders interpreted the immediate outcome as less restrictive than feared. We already saw from earlier today when we was in the short, price was coming down. I told you guys to close the short, okay? And I didn't tell you guys to buy. Right, I didn't tell anyone to buy. I thought we could really reach 3981. Okay, I thought we could reach this level here and then bounce off and go up, but that wasn't to be. And then price started just turning around and started pushing for it. So since price started to push for it, we just had to watch it really. But if we just go on a 4-hour time frame quickly and we mark out the fib and we go from this low to this high, okay, we can see that price reacts over the 62 here. That's near enough to 70, pushes up, doesn't make a new high, comes back down, spikes. Okay, this actually spikes, it wicks the 79%, which is far much more of a better reaction, and then price pushes up. So as it stands, you know, this does look to go towards the upside. Okay, upside would be like, for example, if you look from down here to up here, you know, these highs up here, really, that's what gold could do. Okay, but gold's been inside of this range since the 24th of June. So we're now in July, guys. Almost a month, gold's just been moving sideways. So actually realize that although there's moves happening, price isn't really going anywhere. Therefore, it's not really a there shouldn't be no FOMO factor here. Okay, now, even though this is a potential short, okay, you can't ignore the fact that the higher time frames, if you go on the line graph here, is still bearish. We're still bearish. So what we need to look at right now is this just a pullback? Price goes up, it comes down. Okay, price comes up here. We made a new low here. Price pushes up, it comes down, pushes up, comes down. Are we pulling back right now to continue going lower? Is the question that a lot of traders are going to be asking. So let's see what happens throughout this press conference. We'll be watching it live together, and if a move becomes available, I'll be sure to let you guys know. Off of the 6-hour time frame, I mean, look, I'm not really too fussed with gold, but you know, it's pulled back right now into this zone right here, and even this could trigger a short. So because it could go both ways, it's just best to kind of just, I mean, the 4-hour doesn't look like it will stay bullish. but I could be wrong because the news can do that. You know, the market is no longer trading the interest rate. The market is trading Kevin Walsh's words. Kevin Walsh is the new Federal Reserve chairman. Okay, so if he says something like inflation is improving, or the labor market is cooling, or policy is sufficiently restrictive, or even things like future decisions will depend on incoming data, or risks to growth are increasing, those type of things are bullish. Okay, those are bullish terms. Okay, and then we could expect, you know, we could expect gold to rally. We could expect the DXY to fall, the treasuries to fall, and the Nasdaq. But no one's really looking at the Nasdaq. If he says inflation is still too high, or we're prepared to raise interest rates if necessary, or we need to keep policy restrictive for longer, or the economy remains strong, these are bearish results for gold. So it all depends on what he says. Okay. So what I'm going to watch right now is if the DXY starts dropping while he's speaking, then gold will probably push higher. Okay. And if the DXY starts ripping higher, expect gold to reverse. So I'm going to go on a half hour and add a chart here. I'll make it smaller. Okay. And the 10-year treasury yields. I'm going to have this on my other screen. I'm going to have this on my screen above. You guys can't see this, but it'll be up here. Why does that happen? I don't get that. Cool. So if the 10-year treasury yields, guys, if that is bullish, if the yields go up, golds go up. If the yields come down, gold comes down. All right.
Take a look at earnings. Earnings have been on fire, and it's not just in the tech sector. It's across the board. The equal weight's outperforming also because of a fundamental kind of bleed up. And really, it's something that's more significant. So sufficiently restrictive. If you're looking to crimp growth in any capacity or looking for a slowdown, it's not happening.
Bob, I was going to say final word, but you might be sticking around. I have no idea how this news conference will be, but give us a final thought on what you'll be looking for through what is not a sleepy summer.
I think the Fed got it right today so far. We'll see if there's a press conference and what gets said or not. I'm particularly glad with the fact that they listed the 3 dissenters. Let's assume that the vote had been 7-5 in favor of a rate hike. By listing the 5 dissenters, we would know the 7 people who voted for a rate hike, and we'd sit there and go, we got 2 or 3. Where did the other 4 or 5 come from? What were they looking at? They didn't say any of this 2 weeks ago. What changed their mind? Is it all emotion? And I think that's a great regulator to a central bank and prevents them from just acting on emotion.
Bob Michael, JP Morgan Asset Management. Bob, thank you. I'll be back with you in 5 or 10 minutes' time. This news conference is about to begin in about 60 seconds from now. A newly minted Fed chair, Kevin Walsh, will appear for his second press conference, widely criticised last time around. Not for his refusal to offer forward guidance, that's gone, we've moved on, but his refusal to articulate his so-called reaction function. I think 3 dissenters at the Fed have been pretty clear about how they think about the incoming data and where they think policy should be.
I think Mike's question earlier is
Okay, let's see what happens.
Consider oil and how potentially does the increase in prices affect.
What's good for oil as well, man? I ain't seen oil do nothing.
A one-time shock, but when you have rolling shocks, there is a type of dynamic that takes hold, and that is what we've seen.
I'm not a big gambler. In fact, I'm against betting, but I will ask this question. How many trading floors right now do you think are taking bets about how long this news conference will be with Kevin Walsh?
I think that's the question. I think we're taking bets right now because we're trying to figure out for programming reasons. We're going to have to book afterwards.
What's your number?
I think it's going to be. I think it's going to be 45 minutes.
I'm gonna set.
45 and how many seconds?
45 and 32 seconds.
CK, you playing this game?
I'm not playing this game, but
Okay,
I just imagine Kelsey Barrow at JP Morgan with Kay Hair. They're all around the terminals. betting here. They're probably one of the
Cassie's running the book at JP Morgan.
Yeah, I think she's running the book. They're probably in a bar over at their new skyscraper.
The man himself walks into the room. Kevin Walsh, Fed chair, in front of the podium, following an unchanged decision, but with 3 dissents. Let's take a listen.
My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute.
Hey, gold is coming down.
But we will deliver price stability.
Yeah, it's a sell on gold.
The policy statement conveys just the facts.
Why is oil not doing nothing?
Clear of forecasting.
Here we go.
A choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity.
Here we go.
For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We've begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change.
It's a sell on gold, I think.
42 days ago. Nominal and real
Sell on gold, buy oil.
are materially higher across the Treasury curve. In fact, increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so.
Yeah, buying oil.
The committee didn't change its policy rate. What happened?
Buying oil.
In the intermediate
I'm buying oil.
market attention centered on real data and real economic developments.
I'm buying oil.
Prices
Tell you
react
again.
in real time to incoming information. And the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee. And market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal. And where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech capex has been remarkable.
It's a sell on gold, man.
But that does not necessarily make Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
The TP and SL for oil.
Take our questions, Mr. Chairman. You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence.
SL for oil is going to be 83.4. Okay, it's here on the screen. 83.4. 83.4. It's going to be the SL. I'm just really adding a position to what we already had. I think gold will come down though. TP1 is going to be for oil TP1 is going to be here 86.20. Okay, 86.20. It's going to be a first TP. I'll write it out for you guys.
We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, The economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents. Could you characterise the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you were right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and what we want to do in the period ahead. You characterized it accurately. There was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remake. These days, that means delivering on price stability.
Oh shit. What's that? AJ's pushed back up? Yeah. Nice, AJ. Nice. Keep coming.
How much do you think not going in July was down to the cool CPI?
Alright, Gold is gonna go for it. Go on, Gold. Do your thing. If you wanna push. Do your thing. I ain't gonna stop you, B.
The committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation.
Gold wants to go for it, boy. Let it go for it.
The committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead. But I also want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in within the next couple of weeks. But I wouldn't say we overly relied on any one piece of data, including that data, which surprised some.
Gold is gone. DXY is dropping. EU should be pumping, but EU is still in the same range. So it's just all fake news, really, if I'm honest with you. Like, unless we're seeing something crazy, guys, it's not really doing anything. You know, it's just pushed back up into the range. Oh, that's a nice sell on EN. All right, AJ, you're our last hope. When AJ comes up into this candle here, we're going to see. Your sell limit should be getting triggered soon, guys, with AJ. Let's see what we can do, man. Gold is going for it. Let it go for it. We don't care. But it is in the zone right now to short.
So I think it's a
But we need to wait to finish what this guy is saying.
Because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize of the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger?
I ain't gonna lie, guys.
Close call on holding versus tightening.
Based on what he's saying,
Well, I think the vote was 9-3.
if he's gonna push the dollar down
Through a broader discussion,
and gold is pushing up like what we're seeing, oil is gonna come down.
showed a lot of agreement on the hard questions.
But gold can't keep pushing like this forever. So let's see.
About what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting.
Okay.
And I think the score on that vote was unanimous.
This sell on AJ is valid. But I'd like it to force some more imbalance first. I'd like it to come back up a bit more. I'm not gonna lie. But don't miss this trade. Whatever you do. Well, let it pull up right now. Oh, USD CAD. What?
So that was the discussion in the last 2 days.
Oil's pumping. Is oil pumping?
The dominant
Why is oil not pumping if USD CAD's
inflation
coming down?
continues to be elevated through the forecast period.
I don't get that.
Interest rates could well be part of that solution, but I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made into the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we call that the revealed preference. And so negative
Fucking hell.
well, their inflation target somewhat.
Nothing's really moving.
What I've heard in the last 2 days, what I've heard being
So it is a possibility as well that because of the news,
the 2% inflation target.
gold, this just might be gold's position for the day. You know?
Absent the tools
What's the stock market doing? Stock market's pumping.
is it that expectations are centered around the right number. And I think we made some progress on that. I'm not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We're going to be judged by how we perform. And that's what we intend to do with the inflation target, making
Gold is fucking booting.
making sure we demonstrate we're responsible for it, we're not blaming as another. And
Fuck, you know.
you references the third and the consequences.
I think I was in a buy for that. Oh my days. Alright, the Fed has kept the rates unchanged. We know this, right? But why gold is initially pushing up is because the market started pricing in genuine possibility of a surprise hike. So when the Fed, you know, all the stuff he's saying right now is when he's basically talking, he's basically saying the immediate risk. When he started talking, sorry, the risk has disappeared, but essentially there is no soft inflation target. That alone is pushing it up. You see this headline? There's no soft inflation target. That's what's fucking us up right now. It's not fucking us up, but we're here for oil, let's be honest. Gold is nice, it's spectacular, but we're here for oil, and oil's not doing nothing. Gold on this news, though, has gone 580 pips.
Policy conjuncture a little tougher, but that's among price is trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation.
Have you not seen Bouncer's thing when he's like, look, look, look at this, look at this? Have you seen that? No. He goes, look at this, look at this. This candle was a madness. We missed it, man. Well, we didn't miss it because it wasn't on our radar. The buy was from earlier. I didn't stream today, guys, because I really thought this afternoon it was going to, really go down. And when I told you guys to close the sell earlier on in that trade, I was actually talking to a friend. I don't know if he's on the stream or not, but I was in a little cheeky buy. This candle was insane. It's insanity. It's insanity. It is absolute insanity how I'm not in this, guys. I promise you. I was in it, but I wasn't in it enough, And the reason why it's annoying is because I just thought we would come lower. But that's how it goes sometimes. You think price is going to come to your area. It doesn't. When we look at this a bit more clearer now, played into this 1 hour candle, which is a order block. It's a pinpoint reaction. Pinpoint reaction, no drawdown. It's a beautiful trade if you're in it. If you're not in it, that's fine. We just wait for the next one. But we need it gold to move. Here we go. Oh, it looks like it's moving. Look, if USD CAD comes down, oh my gosh, what the hell? Bro, if USD CAD comes down, oil should go up. I don't know if I've got it written here on the chart. I haven't got it written. Look at this on the weekly. This looks like it's coming down. For those of you who was on my live stream last week, I spoke about this. Okay, I spoke about us pulling back up to fill this imbalance, fair value gap, and then coming down. Because if you have a look at the whole rejection here, we look bearish, So if this comes down, this is going to further support our bias on going long on oil. And I do think this time, guys, I think we're going to surpass these pre-war levels. Okay, I've seen a lot of videos on YouTube where they talk about this war being different and things is going to happen, and if what all they're saying is true and we're just getting started, then we should be passing these pre-highs here of 2022, which was COVID. We should be passing those highs. That's what we should be doing. So, and to pass those highs, COVID level highs, that's 126. Yeah, that's 126. That's a 17 to 1 R&R. So, look, for those of you who aren't yet in this oil trade, well, I just sent out an oil trade, so you should all be in it. What am I talking about? But in case it pulls down lower, okay, I need to turn this news up to listen. I'm sorry, guys. Fed decision today is beginning of story, not end of it.
Between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
So let me go back to first principles, Nick. I don't believe that either part of our mandate is
I'm good, thanks.
or the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we go
in this for 5 minutes and we'll go to yours still.
We're going to be satisfying both goals. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would want a period of high inflation that's variable, such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work
Okay.
through different transmission
This AJ sell,
rates work through lending channels and
it's active, guys.
maybe
It's
confidence
active.
foreign exchange.
Yeah?
The balance sheet probably works through some other channels.
When the setup's there, we got to take the trade. So we're patient. We've been patient. It's pulled into our zone.
These tools in
Yo.
policy. But if the suggestion is somehow we're going to be
Let's take the trade.
aggregate demand, so
Let's get it on. 25 pip SL.
I don't think
114,
tuning business. We're trying
245 is the SL.
in broad order, but really what we're doing as we sit here
114, 245 is the SL. If you use a 0.30 lot size, that would equal $44 loss. So if you do $44 times that by 3, 4, 8, 12, let's say that's 132, I think, or 134. $134 across 3 positions at 0.30, guys.
a little harder to judge, but in the period ahead we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement?
I can't lie to you. This AUD JPY trade, see when that comes. If that comes, guys, it's going to be the biggest trade. I already showed you a lot on who've been with me for some time and on stream, off stream. I had a trade of AJ a couple of years back, 1,600 pips. 2024 July. Ironically, it was July. This time now, look, July. Oh my gosh, I might be onto something here. Next month's August, isn't it? Yeah, I might be onto something here, chat. Look, this short began the 15th of July, right down to the 5th of August, and that was 2 years ago. Let me see what happened 2025 if it dropped off again. January, February, March, April, May, June, July. Okay. It's 15th of July. Okay, 15th of July we was bearish again until the 4th of August. We dropped. We didn't drop the same amount, but we dropped. So, yeah. Look, guys, if this plays out for us, we're going to be happy bunnies, man. We may have to poke the bear a couple of times before we get the success, but that's how the game goes. The game is about being patient. The game is about taking your setup rather than just gambling, just entering a buy, entering a sell just because we see it. That doesn't make sense. That's when things go wrong, you don't know how it got wrong, or when things go right, you can't replicate the success. So we're actually really exercising patience, because a lot of you may have missed this entry. Price pushed down right now because of the news. It could be a good time to get in a trade if price works in our favor, or it could be a bad time because price might just hold where it is until tomorrow. It might hold where it is until the Asia session starts. But this AUD JPY trade looks good. Now, the Australian dollar's pushing up, but what's the Japanese yen doing? Oh, fuck off. Japanese yen's coming down. Cool. Maybe these are just pulling back right now because the daily picture for this was bearish, man. It's been looking good to come down, But when you look at things on a daily, you need to give it days. You can't give it hours. You have to give it days. This Japanese yen, is it going to grow a pair? Time will tell. I think gold's taking the center stage. New hour candle. Gold could pull back right now. If gold keeps going, I'll just laugh. Wow, on the 1 minute gold, it's like it will keep going. It's incredible. It's got to pull back though.
In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation fall,
Gold.
loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to apply for more. Because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, we're in crisis mode. We were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. We're in crisis mode. That strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all that information, so I take seriously that
Gold is still pushing. It's got a rocket up its ass. What can we say?
reform isn't easy, but our general
Is Bitcoin a good investment? Bitcoin's a good investment over the long term. Yeah, let's have a look at Bitcoin and see what it's doing right now. When you say is it a good investment, you got to ask yourself, investing into the stock market over the long term is a good investment, but anything over a short period of time, you have to look at your investment strategy. What are you trying to achieve? Are you trying to make retirement money? Are you trying to, have a return that could, pay you dividends? Because, Bitcoin for me is a very long-term investment. When you look at Bitcoin on the chart, let me turn this down. When you look at Bitcoin on the chart here, you can see even though price pushed up to as high as 125k, if we look at, for all my basic understanding traders in here, okay, I'm gonna keep it real simple and basic for you guys, yeah. So for everyone who understands the basics, excuse me, I don't think that came out right, but if you see these highs here, right, price never pulled back 50%, never. Okay, so what do? We extend the high. We extend to the point where we extend the high to over here. Okay, and now we've extended the high up here. You can see prices in the discounted zone right now. Right, it's just about approaching the discounted zone of 62%. So the perfect place to buy Bitcoin is in this zone where we're currently at, or not in the zone where we're at now, sorry, the zone below. Anywhere inside of here is where I would look to buy Bitcoin. But the picture that we can see is the same thing on every time frame, on every pair. It's the same thing. It's only people that are outside of the game in terms of understanding technical analysis start to think of Bitcoin from like a real like a fundamental perspective, and they start adding in factors that you just don't need, like a fair value gap. We know a fair value gap at some point is going to get filled. At some point, we don't know when, but at some point it's going to get filled. So for the fact that there is a massive liquidity gap below, it shows us that there's liquidity below. So would I want to buy it now until it takes that? No, I'd want to wait. But am I buying physical coins? That's another question, So yeah, I'd wait for Bitcoin to come down a lot more in this zone here. Waiting for gold to come down. Come on, gold, man. Yeah, it's popped down. Silver's coming down. That's always good for gold. What's the DXY doing? Pushing up a bit. Could get a cheeky sell on gold right now, guys. I'll wait though. To be fair, guys, the market closes in a few seconds, man. There's no need for us to get ahead of ourselves, really. Yeah, it probably will pull back and pull down, but there's no real reason to get ahead of ourselves. Well, go on, Vel. Glad I can finally catch a stream. Yes, my bro. Hope you're good. Hope you're well. I've been in oil today, paid myself and left. Nice, bro, man. It's good to be able to do that, bro. It's good to be able to just sit down. Sometimes the best trade is no trade. The best trade is being able to sit on the sidelines and saying, yep, whatever happens is fine. You know, don't get tempted in. That's what I would say. But this AUD JPY trade is a swing trade. So as I was saying earlier, this is a trade that I'd be looking to hold maybe for a couple of months. For a few weeks, but even months. Okay, I held the previous AJ short for 6 weeks and it gave me 1,640 pips. So this move can do something very similar, guys. If I go blank canvas, you can see here it's failed to make a new high. We are showing rejections on the higher side. The weekly though, okay, the weekly is very bullish, so we're not denying that. The monthly is also very bullish, but we've got 2 days left of this monthly candle, and if this candle closes bullish, then fine, fair enough. But for some reason, I just got a hunch to say, hey, this could be coming down. Now, the hunch is supported by what I'm looking at here with the Aussie, okay? If the Aussie, this is the AXY, if the Aussie gets weaker and comes down, that's going to make AJ weaker, right? So if the Japanese yen is stronger than the Aussie, this is going to come down. What we need is the Japanese yen to grow a fucking pair of bulls. Because if this doesn't get any stronger, then we're only hoping on the weakness of the Australian dollar. Now, over the next 2 days, the Japanese yen is low at the moment, but there are talks within their government to be making changes, but they're not going to make any changes right now because of the carry-on trade. I spoke about this before. It's good value for money right now for investors to buy yen for cheap dollars, to exchange pounds or dollars into yen because they get more value for money. They can get more yen. They can get, right now people are going to do business in yen. They're going to get loans in yen because the repayments are next to nothing. But the second the price of the second the interest rates rise with the yen, then all of a sudden people are going to be screwed. Think about it. If you invest all of your money or a lot of money into a specific currency, let's say into the dollar, right? Or the Jamaican dollar. Let's say the Jamaican dollar. You get a house, you get a Lamborghini, you get a mansion, you get all the things you want because you know that the interest in Jamaica is next to nothing, right? So you actually convert a lot of your money into Jamaican dollars because you're making purchases because it's better value for money. But let's say one day the Jamaican economy decides to say, the Jamaican government says, hey, we're going to increase our rates. The second they increase their rates and now the Jamaican currencies become like for like with the pound, there's no value in that. There's no extra value, which means you actually would lose out on money because now all of these interest-backed investments that you've purchased, whether it's loans or whatever, or bonds, you've purchased these things thinking that you was going to get back a certain percent, but now it's the same as, you know, the economy you're living in. So because of that factor, the Japanese yen will probably stay weak for the next 2 days, okay? And when the next month starts, maybe, just maybe, we could see some strength with it. Gold is coming down, like I said. But look, market shut shortly. AJ is coming down. That's what we want to see, man. Yeah, that's what we want to see, guys. Oil is just playing about, man. It's mucking about. Oil is just mucking about. But let's leave it for this afternoon. Some of you already should be in an oil trade with me from this morning. If you're still in that oil trade, Make sure you're risk free with that. Oil could pull back right now. It could pull back. I'm not gonna lie, it's just not moving. I'm quite surprised, to be honest with you, but oil's got the center stage. Sorry, gold's got the center stage. We need gold to come down. But yeah, tomorrow I'm gonna be streaming so we can see the madness. We can see what happens. If you guys are watching this on YouTube, click the link in the description so you guys can get access to my community where I send out these trades and I provide a lot more value. And I'm going to be providing you guys with a lot more insights into the economical sides of trading. But right now, let's be honest, we've got 47 minutes before the market closes. There's no need to rush anything. It's more about us just having a look for educational purposes, how the market's responded, and then making a decision tomorrow. Okay? Tomorrow, guys. Peace out.